Now let us look at some of the questions. The questions that we have selected, they have been earlier asked in some or the other bank exam, and also they represent this portion of the lesson, namely Introduction to Banking, and it covers mostly the topics: what is banking, banker-customer relationship, basic principles of banking, basic structure of banking in India. These are the 4 major topics that are covered under lesson 1. So there will be questions from this, but it is very difficult to only confine to this. There are sometimes we get questions from some other chapters also. It is very difficult for us to exclusively give only questions from here. Therefore sometimes questions from some other area also will come, but they are all interesting questions. We will give to you interesting questions, and many of the questions were asked in the earlier examination, and some of the questions are going to be asked in the coming examinations. Therefore you will enjoy them. As usual, we will give it with a mixture of enjoyability, not teaching with highbrow and with a lot of definitions and all, with legalistic nitty-gritties and all. We will understand the concept behind each question, and you will enjoy these questions. And I will be going through them one after the other, and you please follow them very carefully. So the first question is, the word bank has been derived from a Latin word which means what? We have already seen that the answer is a bench for the keeping, lending and exchanging of money. The word bank is derived from the word bancus, which means bench. In the good old days of ancient Rome, the Jews used to sit in a bench and exchange money and do the business of banking. And when they went bankrupt, the benches were not able to pay the money they had borrowed. The benches were broken, and therefore the word bankrupt came into existence. Therefore, the word bank is derived from a Latin word which means bench. The next question is, the first joint stock bank which was established at Calcutta is by what name? What is the name of the first joint stock bank started in Calcutta? Some of you, it will be interesting for you to know, since I worked in Calcutta and Delhi, both cities I worked. Calcutta was the prime commercial capital of India till 1912. Only afterwards it slowly shifted to New Delhi. So if you look at the very old history, you will find Calcutta was the headquarters of many things. So here in Calcutta, the first joint stock bank that was opened was Bank of Hindustan. And this Bank of Hindustan was established by some European agency houses in the year 1770. Imagine 1770, 1870, 1970, 250 years, something around 250 years back. And surprisingly, this went out of business in 1792. So it had a very brief history of its existence. I have also presented before you a share certificate, a facsimile of a share certificate of Bank of Hindustan. They may ask this question: which was the first joint stock bank started in India? It is Bank of Hindustan, started by an European agency in Calcutta in the year 1770. The next question is, who controls bank credit in India? Various options are given: SEBI, RBI, SBI, Indian Bank. The obvious choice is Reserve Bank of India. Reserve Bank of India is controlling credit, the quantitative credit as well as the qualitative credit. The total quantum of credit that should flow, and then the quality of to whom it should go, to which sectors it should flow. All these things are being controlled by Reserve Bank of India. RBI controls bank credit in India to ensure national economic priorities and social concerns. That is why we have got something called a priority sector, which ensures nearly 40% of the total credit goes to the poor and middle class people and small people. The next question is, a check is always payable on. The options are demand, a specified future date, the last day of the grace, the will of the paying banker. The paying banker can pay on any day he wants. So what is the correct option? Now we have to go to the definition of a check. A check is a bill of exchange drawn on a specified banker and is always expressed payable on demand. It is a bill of exchange. What is a bill of exchange? We will not go into it. It is an instrument, negotiable instrument. And suffice for us to understand now, a check is a negotiable instrument. And as per the very definition of check, it is payable always on demand. Suppose you write a check. Suppose a person writes a check. Pay to Mr. Vivek. The check is drawn on, let us say, Punjab National Bank. Pay to Mr. Vivek a sum of rupees 1 lakh if he agrees to marry my daughter. What Punjab National Bank will do? They will try to broker the marriage between Vivek and the check drawers daughter's marriage. No. You cannot have conditions attached to a check. It is an unconditional instrument. Then suppose somebody writes a check, pay to Mr. Gupta a sum of rupees 2 lakhs. After 3 months, then it becomes a usance. A usance period is attached. It is not payable on demand. No. A check, by its very definition, is a negotiable instrument. It is drawn always on a bank. And number 3, it is always payable on demand. It cannot be made payable in any other manner. If it is made payable in any other manner, it will cease to be a check. Therefore, the answer for this question is, a check is always payable on demand. Check is always drawn on a bank and is always payable on demand. So let us go to the next question. A savings bank account in the sole name of a minor can be opened provided the minor completes what age? This is the question. The options given are 10 years, 12 years, 18 years, 13 years. All options are given. 18 years, of course, is the age when a minor becomes a major. After completing of 18 years, a minor becomes a major. All of us know. Now, at what age you can open an account in the name of a minor so that the minor can himself act? And always remember, minor is a protected person in law. A contract with a minor is void ab initio. That means you cannot have any business relationship with a minor because you cannot enforce the conditions of the contract on the minor because a minor is incapable of contracting. That is what the law says. Now, at what age you can open an account for a minor? These banks were using, they were using their own logic, their own systems and procedures. Some banks were opening at 10 years, some banks were opening at 15 years, some banks were opening at 12 years, some banks were not at all opening. So we had all kinds of banks opening accounts for minors in their own name. There was no uniformity. Why in their own name? Because normally when suppose a father comes with a child, a 2-year-old child, and he wants to open an account for the minor child. The minor child, suppose there are some children, who are born with a silver spoon, and they will be having some 20 crores worth of property, 20 crores in money, and a lot of shares and all. So he wants to open an account for the minor. Minor can also pay income tax. So how do we open normally? We open the minor's account by minor Sudhakar, by father and guardian, so and so. Always the operation is done by father and guardian. But the question here is, at what age you can open a minor's account so that the minor himself can operate the account? Can be opened in minor's account and can be operated. So there was varying ages followed by various banks. Now that has all been changed by Reserve Bank of India to 10 years. In 2014, they came out with a guideline by which they said banks can open minor's account if the minor is of 10 years age. As per RBI guideline DBOD 108 of 2013-14, minors above the age of 10 years may be allowed to open and operate savings bank accounts independently. Underline the word independently. You need not open by father and guardian or by mother and guardian. A minor in his own capacity as a minor, he can open an account if he is of 12 years age, if he is of 10 years age, and then he can operate the account. Reserve Bank has gone one step ahead. They have said banks are free to offer additional banking facilities like internet banking, ATM, debit card, checkbook facility, etc. They have given everything except perhaps credit card, because credit card you cannot give, it means extending credit, which is prohibited. You cannot extend credit to minor. So other than extending credit, all things have been given to the bank, given to the minor. And you should not allow a minor to overdraw an account. You should ensure that the minor's account is always in credit balance. You cannot allow any overdraft because you will not be able to recover the money. You cannot file a case against a minor in any court of law because minor is a protected person in law. But why they have come out with this piece of guideline with so much deficiencies, so much risk in opening in the name of a minor's account? You allow himself to operate. You open in the name of the minor, allow himself to operate the account. Why we should take all this initiative? It is because we have to inculcate the spirit of saving in the young person's mind. A boy or girl at the age of 12, if you open as a banker, as a bank manager, I have seen so many young people coming to the bank with the passbook and depositing the money and learning the good habit of saving at a very young age. It is very, very important that you teach them the habit of banking and habit of saving at a very young age. And if you open an account in their own name and allow them to operate, operate the account, withdraw the account, do all the deals, then they will learn the finance, the role of finance in their life, and how they should, the savings habit also will be inculcated in them. So that is why Reserve Bank of India has permitted banks to open accounts for minors above the age of 10 so that they can independently operate the account. The one precaution that a bank should take is that they should ensure that the account never becomes overdrawn, because if it becomes overdrawn, the bank will not be able to recover the money from the minor.